Hi, this is Rob O'Malley on the O'Malley team at Preferred Rate, and I'm getting a ton of questions right now that are really economic level questions. It's stimulating. It's really forced me to get a whole nother higher level of understanding as to what's going on in the nation and what's driving our mortgage and real estate market specifically. We've got people that are into the market for the very first time. You know, the millennial generation. They're very smart people. I mean, they're way smarter than I was at their age. They're doing their homework, and they also remember mom and dad losing everything back in 2008. And then we've got, you know, the people that aren't first-time home buyers that did lose everything or may have lost everything in 2008. A lot of apprehension, a lot of concern. We just came out of a pandemic. Interest rates were pushed down to 2.5%. That literally kind of just skewed the perception of everything because we were in kind of mortgage Disneyland there for a couple of years. Don't get me wrong, I loved it. It was fun having my job during that time period. Let's talk about history and why the predictions are coming out and saying what they're saying, and why I'm saying now is a great time to buy a home. It is a buyer's market. We have a window right now where buyers can get a screaming deal because there's not a lot of buyers out there competing for the same home. Let's talk about what's going on here. I'm going to share my screen. Here we go. We've got Fannie Mae saying that mortgage rates may fall to 4.5% to 5% in 2023. This is an article that I pulled directly off of CNBC. I want you guys to see down here at the bottom. Here's the link, cnbc.com. This is Fannie Mae saying what their predictions are, 4.5% to 5%. All right. Now let's go and see why the Federal Reserve and the other economists in the nation are saying this. Here we go. This is where I'm going to go super nerd on you. Take a look. This is a quick history lesson of what's happened with the Federal Reserve and our chairmen. Burns and Volcker were in the 1980s. What happened there? Inflation went from 7% to 14%. Mortgage interest rates went from 12% to 18%. The Fed funds rate, what did they do? They did exactly what Jerome Powell is doing today. They took the Fed funds rate from 11% up to 20%. The inflationary response was the 14% inflation rate dropped down to 5%. Mortgage rates came down from 18 to 12%. That was the 80s. Mr. Greenspan, late 90s, early 2000s. Inflation went from 1.7 to 3.5. Mortgage rates went from 7% to 8.5%. The Fed funds rate, they pushed it from 4.75 up to 6.5. The inflationary response was what they were hoping for, 3.5 down to 1%. Mortgage rates then dropped from 8.5% down to 5.5%. Let's look and see what's going on with Mr. Jerome Powell today. Inflation this year, since we came out of the pandemic, went from 1.5% to 8.2%. That's a jump. Mortgage rates went from 2.5% to 7%. The Fed funds rate was at 0. It's currently at 4, and they're about to push it up again. What's going on? The inflationary response is currently declining. Mortgage rates should decline as inflation declines. This is great news, and it's actually happening as we speak. A couple of weeks ago, the CPI report came out saying that inflation had dropped to 0.5%. Within 24 hours, mortgage interest rates dropped 0.3% in rate. 0.3 in rate overnight down. If mortgage rates had gone up 0.3% overnight, I'd have had a coronary as a loan officer. Now let's jump a little bit forward and take a look at what's going on here. This is why I'm saying it's such a great time to be a buyer. I just ran these numbers for a family, VA family. I can do a VA 2-1 buy down. I can do an FHA or conventional 2-1 buy down. Take a look at this, folks. This family's buying at $700,000. In this VA scenario, they're putting 0 down. $700,000 loan amount. So he's getting an interest rate of 5.75 by asking for a seller credit of $15,000. Please take a look at the total savings subsidy of $15,000. That has to be paid for by the seller. I've also got a 2-1 temporary buy down video that's going to be a link at the bottom of this one, so you can go and see how the 2-1 buy down works. The moral of my story here is this family is enjoying a $15,000 seller credit on a $700,000 purchase price. That seller is going to buy the rate down to 5.75%. In the 2-1 scenario, the first year's payment's based on 2% lower, 3.75%. That's what their payment's going to be based on for the first year. And then 4.75% for the second year, 5.75% for the third year. In an ordinary scenario, in an ordinary economy, we'd probably just do a normal buy down. That $15,000 would be spent. You just stick with your 5.75. You wouldn't use the 2-1, and that's where you'd be. Well, In this current environment, this 2-1 buy down couldn't be better timing. Why? Because we know now mortgage interest rates are poised to drop next year. So get in with this temporary 2-1 buy down. That $15,000 subsidy sits there in an account, paying your mortgage down a little bit at a time every month. And when I call you, because I will set all my clients' interest rates as a tickler. So when the rates are 1.1% lower than their current interest rate, that full 5.75, I'm calling my clients. I'm doing an auto refi, and all that money that's left in that subsidy account gets applied towards their principal balance. So it more than covers their half of the cost for the refis because I'm waiving my lender fees on my auto refinances for my clients next year. And then the rest of that money just pays the principal balance down. Is it a great time to be a home buyer? Yes. Why am I saying this? Because history says it. The Federal Reserve is actually doing it. We're seeing the results in the CPI reports, and our number one economists and all the other national economists are saying this is what's happening. They predicted it. It's actually showing up. And even Fannie Mae's on board saying rates are coming down. Don't sit on the sidelines. I want you guys to understand, if families sit on the sidelines, take a look at this. I'm going to do it one more time. I'm going to go super nerd on you, okay? This is where we're at for inventory in the nation. Okay, here we go. In 2007, there was 3.7 million homes available for sale in America. Here we go to today, 2022, we're at 870,000 homes available. We have record low inventory in the United States, record low inventory. In 2007, we had 116 million families that were eligible to buy a house. Today in 2021, I don't have 22's numbers yet, 129, call it 130 million families in America that can qualify to buy a home. We've got record low inventory. We've got record highs in families that can buy. If everybody sits on the sidelines and waits until rates come down and prices are down, it's going to be the same market we just left a year ago, where we're going to have 20 offers on every home, highest and best. First-time home buyers are going to really have a hard time to get in. People are going to be settling on the house instead of getting the one they love, and they're going to have to be overbidding and fighting with other people to win the home. I don't want people to wait. If you've got any questions, call me. I've got the data. I'm happy to share it. I'll run the numbers. Buying a house now is probably the best time it's been to be a buyer since 2012. I hope this wasn't too much information on a 7-minute video, but I wanted to do this super nerd style and make it fun and absorbable data. Get this news out to everybody. Buy now, don't wait. We'll refi you within the next year. Everybody's going to win in this kind of an environment. The sellers need buyers and the buyers need homes. Look forward to talking to you soon. Rob O'Malley, preferred rate, 925-418-3956.